I think one of the issues for the Bank of England when they got to December's meeting was that they had just moved in November and more or less indicated that that might be it until they got to February. So I think what the market will wonder is whether the economic data that has been weak over the last month in the UK and has weakened sterling as a result, whether that's echoed in kind of a greater degree of dovishness within the MPC minutes. My guess is that they'll signal that we're on hold, etc. But it'll be the nuances of the debate and whether there's a shift towards maybe moving in January, for example, on an expansion of QE rather than February. And as you say, that would keep sterling under pressure.
What about the whole bank reserves issue as well? Do they become more vigilant with that and become more hawkish?
Well, I think in a way it's a little bit early for them to get hawkish. I think the debate at the MPC still seems to be whether the economy needs further stimulus. The UK is, even after GDP numbers yesterday, still officially in recession. So I think that will be the preoccupation. It just seems a little bit early for them to have to think in terms of exit strategies or getting a bit more hawkish. I think really that's a story for much later in 2010.
Okay, so what are your targets for sterling here?
Well, I think it's still downside on cable. I think we're going to move at least one big figure lower today. But to be honest, I think the catalyst for that's going to come more in the afternoon from stronger US data. I think the market has sold sterling off, as you mentioned at the top here, and I think that if the MPC minutes say are pretty much neutral, in other words, don't match the pessimism in the market, then we might just see a little bit of downward pressure on euro sterling, perhaps half a big figure lower this morning after the minutes.
But to change all this, to change your view, I suppose we're going to have to see quite a change also as far as the picture, as far as the economy goes.
Yeah, and well, in a way we are seeing kind of early signs of changes. I think there's a general acceptance even at the MPC that the higher frequency data is painting a more upbeat picture than the GDP number. So we have got some grounds for guarded optimism, but you're right, we've had sufficient disappointments over the last month that you can't really get very excited about sterling upside. You need to get a greater sequence of numbers, and obviously we're going to have to wait for the new year for that to happen. Right,
well, meanwhile, does the dollar bounce go on?
Yeah, I think so. I mean, we've got good numbers in prospect today. Personal spending and incomes in the US. New home sales should be higher. We may even get an upward revision to US consumer confidence. All of that, we're seeing a pretty strong correlation between positive US data and a positive dollar response, and I think that'll hold through the Christmas period. So I think dollar will be bid through the afternoon against all currencies, including the yen, as you mentioned.
Now, we have seen this year this trend of when we see equity markets rally, the dollar's been weakened, but that trend is now reversed, it would seem anyway. What does that tell us?
Well, I think we're in a transition period. I mean, to be honest, I thought this transition would happen the very early part of 2010 rather than the latter part of 2009. But in a way, risk appetite, as reflected in equity market behavior, it's kind of losing its grip on the currency market and has been replaced by a bigger preoccupation with interest rate prospects and growth prospects. In this environment, we're getting most of the good news out of the US economy, at least relative to expectations. It's providing that bid for the dollar. So it, as you say, it's turned on its head how the dollar responds to good US numbers, where previously it sold off. Now we're getting a bid.
Dramatic move for the dollar against the euro over the course of the last couple of weeks. But is it a move which was, I mean, I hate to say this phrase, it's too far too fast, and what sort of levels are we looking at that the euro must actually fall below in order for a sustained dollar recovery there?
Yeah, well, I guess the market initially would be looking at something around 140, 180, 140, 190, because that's the 200-day moving average on euro dollar. It has moved very far, very quickly, but to be honest, that's tended to be the nature of euro dollar. We get these periods of range trading and then punctuated by seismic shifts. The difficulty, of course, as you know, is this is a weird time of the year. It's the Christmas period. It's year-end adjustments being made by a number of players in the market. So maybe something of a phony war. The real test for the dollar will be how the market behaves, let's say, in the second week of January, when we're back to more normal trading environment.
Daragh, what about your trade of the day, given what you just said, it is volatile?
Yeah, I mean, I got to admit, I'm a euro sterling seller, I think, through the day, and equally a euro dollar seller. So they'd be the two ones, because you've got nice event-driven plays there. Look for downside on both.
Thank you very much indeed for joining us, Daragh Maher there from Calyon. Have a fab Christmas and New Year, Daragh. Daragh Maher there. Right, let's see how gilts are faring now ahead of the release of those Bank of England minutes as well. Just having a look at what's happening with these British bonds, and currently we see the yields are moving up, so our bond markets are under pressure both in Germany and at the UK. There we go, the US 10-year bond there, unchanged, yielding basically 3 3/4%. So that's what we have at the moment as far as gilts and indeed some of these the benchmark bonds go in Germany and the US. Fast approaching that open in Europe. It's a mere 14 minutes away. When we come back, we continue our build up to the start of the trading day. We're going to be live over in Frankfurt, having a look, engaging where the DAX is headed in 2010, what the major themes are going to be on the German markets too. Find out after this break.
Time was, you wanted a cash cow. I'd be the man to rope it in for you. These Internax people allow you to invest without the need or expense of a middleman. Hell, all you need is a computer. And it's a damn sight easier than the old way. Looks like an opportunity to me. We're living in modern times, friend.
Internax, your international online broker in Luxembourg.
I've spoken one-on-one with thousands of interesting people. Nothing beats the personal connection.
I can't imagine life without Charlie Rose or this.
You make me like being interviewed.
Songwriting's easy, and really it's like breathing.
An exclusive conversation with America's most trusted...
You want to be greedy when others are fearful, and you want to be fearful...
That's the way I win Grand Slams. I think everyone...
An amazing collection of interviews.
You now can watch Charlie Rose around the globe, weeknights on Bloomberg Television.
Offshore, Forex, CFDs and futures. Internax, your international online broker in Luxembourg.
Welcome back to Countdown. We're racing